Today, I'm not just going to give you a strategy, I'm going to give you a framework for reading the market. It's built on 2 free powerful tools, and by the end of this strategy, you will understand the precise logic for entering and exiting a trade with confidence. Let's begin. We'll demonstrate this on 5-minute Bitcoin chart. But this framework applies to many markets, and yes, you will see losing trades. Trading is a game of probability, not certainty. To prove the edge, we backtested this on 100 consecutive trades in the gold market. And the results were 64% win rate, a profit factor of 3.56, which is exceptional, and critically, a max drawdown of only 2.97%. This last number is arguably the most important, as it speaks for the strategy's stability and its ability to protect your capital from catastrophic losses. These are not just vanity metrics, they are the statistical proof of an edge. Let's build this strategy from the ground up so you understand why it works. So for the part 1, let's define the trend with intelligence. Our first job is to answer the most important question in trading. What's the current dominant trend? We can't use a simple moving average. It lacks too much and gives false signals in choppy markets. We need something more intelligent, something that adapts to volatility. In your TradingView indicators, search for and add black flag or swing arm ATR trend indicator. This is our foundation. Think of this ribbon not as a simple line, but as a dynamic zone of support and resistance. It's powered by the average true range or ATR, which means it expands and contracts based on market volatility. When market is quiet, it tightens, and when the market is volatile, it gives price more room to breathe. This is the first key advantage. Now, the default settings are not optimized for our short-term approach. We need to refine them. So go into the settings. First, under the inputs tab, since we're on the 5-minute chart, we need the indicator to look at a slightly higher time frame for a more stable trend reading. So change the FTS time frame to 15 minutes. This is the pro tip. Using a higher time frame indicator smooths out the noise on your trading time frame. Next, set the ATR period to 10. Leave the factor at 5. Now click the Style tab. This is cluttered. We want a surgically clean chart. Uncheck every single box except for Fib options and plot backgrounds. Then click OK. Look at the difference. Now we have a clear dynamic map of our trend. Now part 2. Confirming entry with momentum. Having the trend is half the battle. But we don't just trade every time the price touches the ribbon. That's still gambling. We need a second layer of confirmation. We need to know the momentum is on our side at the precise moment of entry. So go back to the indicators section and search for RSI Histo Alert strategy. A standard RSI tells you if something is overbought or oversold. An RSI histogram, which this is, visualize the momentum of the RSI. Those green and red bars show you the speed and direction of the momentum shift. This is far more useful for timing entries. Again, we need to optimize the settings for a specific purpose. Click the gear icon under the Inputs tab, change the RSI period to 15. Then set the buy alert level to -20 and the sell alert level to +20. These levels act as our filter, ensuring we only consider stronger momentum signals. Finally, leave the RSI histo modified to 1.5. This simplify makes the histogram bars a bit larger and easier to read visually. Now, our toolkit is complete. We have our adaptive trend filter and our momentum confirmation engine. So, this is part 3, the rule of engagement. Alright, let's walk through a textbook short trade step by step. Rule number 1, the environment. We see the black flag FTS ribbon as red and the price is consistently trading below it. So the market is in a confirmed downtrend. We're only looking for sells. Rule number 2, pullback. Here we see the price rally coming back up to test the red ribbon. This is the momentum of truth. Amateur traders might see this as a reversal, but for us, this is a potential low-risk entry zone. Rule number 3, the confirmation. As price touches the ribbon and is rejected, we immediately look down at our RSI histo. We wait. We see a red bar, another, and there. This red histogram bar has closed below our minus 20 level. That is the precise confirmation we were waiting for. It signals that bearish momentum is reigniting. Now rule number 4, execution. The candle that aligns with that confirming RSI bar is our signal candle. We enter a short trade at the opening price of the very next candle. Our stop loss is placed logically, just above the recent swing high. For our take profit, we aim for a simple 1 to 2 risk to reward ratio. We're risking $1 to make 2. This ensures our winners are significantly larger than our losses over time. And for a buy trade, the logic is the exact inverse, designed to catch upward momentum. We look for a price to be above a green FTS ribbon. We wait for the pullback down to the ribbon, and then we take the trade only when the RSI histo confirms the entry with a green bar closing above the plus 20 level. So now you have the complete blueprint for identifying entries and exit. But none of this matters without the single most important skill of a professional trader, risk management. Knowing how much to risk on each trade is the key to longevity in this business. That's why I've created a dedicated video on exactly that. It's popping up on your screen right now. In it, I break down how to calculate your position size based on your account balance and stop loss, so you can trade with mathematical precision. Click and watch it now. It's the other half of the puzzle. So if this framework made sense to you, a thumbs up is always appreciated. Subscribe and hit the bell so you don't miss future content. And let me know in the comments, what markets are you going to backtest this on first? Thanks for watching and trade with discipline.